Okay, here's our precious metals update. So we'll start with gold. So at one point it looked like, and this is August 30th, so Wednesday night, or excuse me, Tuesday night. So we have the first 2 days of trading, and because gold trades overnight, this is actually your what will become the Wednesday candle on day 29. So we did have what seemed like it could have been an early daily cycle low on day 22. We had this nice little rally. It did not close above the 10 period moving average, which I guess, hindsight 2020 was a tell. But more importantly, again, as is the case with all videos on this channel, it's about the levels, it's about price action. And once we broke below that low, right? So we formed a high from this candle, right? And then we made a low below the low from this candle that marks the high. So the low for this candle here is 1750 and 6 cents. So once this candle broke below that, and we obviously closed decisively below it, that was your swing high. And then we got followed through the following day, but we did get a rally, and then we got more follow through. Now we're back to this low here from this day where we got saved, right? Where we got that little rally. And so the downside continues. Daily cycles for gold are usually around 30 days. You have this past one, this previous one, I should say. I'll get rid of this for now. Was actually 47 days, so they can be much longer. But then the previous one before that was 33. The one before that was 42, 32. You had this really long one at 55. So we got to just buckle up and see and watch the price action. But I'll just call out, this is a textbook downtrend, and I hope this is starting to crystallize with you as you're watching, the videos on this channel, right? So like we had this downdraft, and then it looked like it was a daily cycle low. This was already a lot lower than we would have wanted to see it go, but it's like, okay, well, then we went here because we really would have wanted it to stop here because this was your last higher low. So we really wanted it to stop here, but it didn't. It went all the way down here, and then we bounced. But what did we do? We then went lower. So I just hope you're watching this. Oh, I'll just add that back on. So, I'll just start from here. We went up. That's a high, higher low. High, higher low. High. And this was your warning, right? This is obviously a lot lower than this low, than this low here, right? So this is now a lower low. And then what is this? It's a lower high. And what is this? A lower low. And so at some point we'll expect a lower high, which will be below this one. And then we'll get another lower low, and a lower high, and a lower low. That's how a downtrend works. And we'll see how long the downtrend lasts, obviously. Like, that's what it'll be when we get our daily cycle low, we'll get a little bounce. We'll see how long that lasts. But right now, not looking great. And if you go to the weekly chart, again, these levels matter. I talked about this was a really ominous one, right? We closed the same way we had that daily swing high, right? Here, right? This was your weekly swing high, right? Once this candle went below the low for this candle, you had your weekly swing high. That was your big signal. Time to get out, right? That was at 1770, right? What's the exact low for that? 1771, basically, right? So that's $50 higher than where we are now. So we closed decisively below it. We got a little rally. What is this? It's a lower high, right? And now we're making a lower low. Again, we're going to make a lower high at some point. And this would be week 6 of the weekly cycle. And that's the thing. This last weekly cycle dragged on for so long, right? It dragged on for 31 weeks, right? This whole thing. This was the war-fueled weekly cycle. So we ran up for 12 weeks. This was around the Ukraine war. Then we had this vicious pullback. I remember people on Twitter were like, "Oh no, this candle, it's gonna be totally fine. It's all good." Like, clearly it was not. We had this massive rejection the next week that created your swing high below here, and then we just kind of chopped around a little bit. Then we went lower, lower high, low, lower high, low, lower high. You get the picture, right? And most importantly, I think the most important relevant number for gold is 80, which is to say it is month 80 of the 7 or 8 year cycle, right? Pick your poison. If it's 8 years, it's 96 months. If it's 7 years, it's 84. Whether it's an 84-month cycle or a 96-month cycle, you're still pretty close to the end, especially obviously if it's an 84-month cycle or probably somewhere in between there. We're at month 80. Look at this chart right here. If this wasn't our low, which as we said in the previous video, maybe it is, right? Like we need to make a swing low to confirm that. Notice we got almost right to the level where we needed to get to that swing low and we just got rejected. What are the odds that we make a new low below this one? I think they're incredibly high, right? I think they're incredibly high. Like, and you think about it, that this is where the multiple time frame analysis goes, right? The expectation is that this daily cycle low that or I should say this daily cycle decline that we're in now takes us below this low here at day 47. So it gives us a failed cycle, which is our low here. That's how this works, folks. Levels on the daily are going to end up being levels on the weekly, which are also levels on the monthly. And so, as I've been saying, what's more likely that we are currently descending into the 7 or 8 year cycle low, or that this is just a pullback and we're going to make a new high and then descend into the 7 or 8 year cycle low? Again, just to be clear, we made our 8 year cycle high on month 56, August 2020, right? That's what this high is here. We then had a vicious double top. That was the cycle we just looked at on the weekly. Again, multiple time frame analysis. That's this really bearish wick here, the war fueled rally. That did not make a new high. It missed it by $5. Pretty brutal double top, lower high. And so if month 56 was not our high and we're not descending into the 8 year cycle low, the alternative would be this is just another routine pullback, but then we're going to make a new all-time high above this high from month 56, and then we're going to have the decline into the 7 or 8 year cycle low. That doesn't seem very likely at all, right? Much more likely that we're descending into that 8 year cycle low right now. So it's time to buckle up and we'll have to see where that level resolves. You assume it's going to sweep these lows, right? Again, there's no reason it has to, but that's what you would expect, right? At a minimum. And so if we switch over to silver, which is going to get pulled down with gold, if gold is descending into an 8 year cycle low, well then silver certainly isn't going to be having a good time of it, right? And so daily chart, so silver is on day 34. We've broken much more decisively below that swing low that might have been our daily cycle low. For silver, it was day 27, whereas gold, it was day 22. But again, same idea, downtrend, low, lower high, lower low. We expect a lower high and then another lower low. And on the weekly, I talked about this bearish outside weekly candle. This pattern usually follows a lot of downside. And so far, we have 2 down weeks. We obviously have 3 more days of trading this week, but this would be week 7 of our weekly cycle. And so just to be super clear, it seems like we have a weekly cycle high on week 5. The previous weekly cycle topped on week 6, the one before that on week 7, the one before that on week 7. That's brutal. That means the weekly cycle rallies are getting shorter and shorter and shorter. At some point, silver's going to have that breakout weekly cycle. It has to. It's just a question of from what level is that going to start and how much more downside do we have to endure. And so if I just ballpark it here, right? If we say we have a 24-month cycle, excuse me, a 22-week cycle. So this past one was 24, the one before that 18, the one before that 26, 27. So say it's more like 24, 25 weeks like it had been in the past, right? Like let's say it's 25 weeks, let's just call it. That would give you your low on, right? So so right around January. So basically, if we are descending into a weekly cycle low already, and we're going to get a long cycle as we usually have, that means we'd be descending for basically the rest of the year, which wouldn't be surprising given we could see bearish action from the whole stock market for much of Q4. And so what might end up happening though is we might get so much downside that it's actually a shorter cycle, like something like 14, 15 weeks. Like that's what happened with the COVID cycle, right? It was actually a 14-week cycle that was really dramatic in downside, went down 40%. I talk about this sometimes. Sometimes a really, really sharp decline just ends faster. It's almost like you run out of selling pressure, which kind of makes sense. So in that scenario, we get our low more like the end of October. So we'll have to see, and it'll obviously correlate with gold. And if we look at the monthly chart, same kind of idea as gold, except in this case, we actually did have a monthly swing low at one point. You know that because you can see this candle, right? This at one point, this was a green candle above this high here. This was acting as your swing low, which is why we have this little arrow here. That has obviously failed spectacularly, right? And it's seeking out new lows below this low here. And what will that make this candle? It will make it a bearish outside candle. I hope you're following, right? So we had a bearish outside candle that was our daily cycle high. So that's this candle here on day 22, right? So see, it makes a new high, but then it fails out of the other side. It makes a new low. And then look what happened after. Just a waterfall decline. Then we had a feeble bounce, lower high, and then more waterfall decline. Given this weekly pattern, like the same as a daily, I'm expecting more waterfall decline on the weekly. But then that sets up, so you get a weekly outside, you get a bearish outside candle on the daily, which turns into a bearish outside candle on the weekly, which turns into a bearish outside candle on the monthly. That's how it works. If you have follow through, a pattern on a lower time frame cascades to a higher time frame. So expecting a low below that $18 level. And then from there, again, as we think about the weekly cycle, if it is still declining, we could see a lot more downside even from there. And for the quick second, I'll just do the annual charts. So this is a chart that every candle is 1 year. And so this is definitely looking like it wants to make a move to that 2020 low. That obviously feels like it's so far away from here. But that's something that, is certainly not off the table, especially if, again, we are declining into that weekly cycle low already. And then finally, we'll look at GDX. We'll actually look at the dollar as well. So GDX actually looking almost maybe the worst of all of them. And this was probably your tell. I mentioned this in those previous videos. You like GDX just had trouble getting off the mat, right? It rallied about 13% for this like really ugly, feeble 12 high on day 12, and then just rolled over, lower high, rolling over some more. It's day 26. These lines were here because there was a gap at one point. We obviously filled it and then some. So always be cautious when you see a gap. It probably will come back and get filled. On the weekly cycle. So this is an interesting one where we had a feeble bounce for 2 weeks, and then we've gone and made new lows again. So if we call this 27, 28, 29, 30, 31, it's unclear, right? Like, is this week 31, or is this actually week, or is this actually, this is a new weekly cycle and we're declining? So that's one possibility, right? So if this is 2, 3, 4, 5, right? Because the other possibility then is that it's day 5, right? Which I think ultimately, it's week 5. I think that's probably what we're going to end up at, like it's going to end up being. And people will quibble. They'll say, well, this never really confirmed the weekly cycle low because we never closed above the 10-period moving average. And you're absolutely right. But that may just be an indication of just how bearish a weekly cycle it is, right? Where, the weekly cycle rally was so feeble that it couldn't even break above the 10-period moving average. Time will tell, obviously. But the point is, we're in a downtrend on the weekly level, right? Like we're, that's very clear. Down here, lower high. Down here, lower high. Down here. So the expectation would be another lower high, a lower low, lower high, etc. Again, if silver has a long time to fall, then so too does GDX. And finally, on that monthly chart, remember how I talked about how silver was seeking out new lows on the monthly? Well, that's what I mean when I say GDX is leading things. GDX has already done that. You see how it's just free falling, right? It's already, so I'll just be clear. It's below last month's low. This is the 5th month in a row that it's making new lows. So you see how we had a massive top on April, and then we made a new low in May, new low in June. So actually 4th month, excuse me. New low in June, new low in July, and now we officially have a new low in August. September starts in just a couple days. What is the probability we're going to make a low in September below whatever the low ends up being in August? I think it's incredibly high, right? I think it's incredibly high. So that's GDX for you. And I'll just actually flip over to the annual chart, similar to silver. Oh, God. I hope you're seeing this. This is a bearish outside yearly candle. Bad news bears, right? We made a new high and then we made a new low. Now, if we were to extrapolate this to what we generally see out after bearish outside candles, we could expect a few years of downside. That said, because this is a yearly candle, a lot of price action happens within it. So I wouldn't read that much into it. But at the same time, just look at this and make sure you're understanding the significance. This candle, this chart is telling you there is absolutely no reason to be long miners right now. This is just nasty. I mean, look at this. My God. And what this is telling you is at one point this was a green chart. Again, because this wick used to be the body of the candle at one point. It was green. We had a new high on the year after an inside year last year, after a big bullish outside year in 2020, right? This is a big bullish outside year. Notice, right? We made a new low below 2019's low, and then we made a new high. Now we're doing the opposite on the other side of it, after this consolidation year. These are important signals. This tells me that GDX wants to test this low here at that $16 level. I know that sounds incredibly sensational, but that's what this chart is telling you it wants to do. We'll see if it gets there, but it gives you something to be cautious of and just kind of be on the lookout for. And so finally, I'll look at the dollar really quickly because, again, this is really important. And I think this actually may be a little bit of a saving grace for the metals. Usually they move inversely. Now, we're just consolidating here. So we made a new high a couple days ago, day 13. Today is day 15 for the dollar. This definitely has the look of a bull flag. And I also say the next big catalyst is the monthly jobs report. We're going to get, it comes the first Friday of every month. So we're expecting to see that this Friday. And this definitely has a look of a bull flag. And I'll say on the weekly level, this is causing consolidation here on week 13. So that is important. It's not super early in the weekly cycle. So, you wouldn't expect too much more of a rally here before we start some kind of weekly cycle decline. Yet we did have this 4 weeks of sort of decline / consolidation. So this is definitely giving us some mixed signals, I'd say at best. Yet I suspect we're going to get a really strong reaction from the dollar on Friday from the jobs report. So that'll be really our sort of cue. And if I look at the monthly chart, I keep calling this out. We now have a new high on month 19. So we now officially have a right translated 3-year cycle. If you assume the 3-year cycle is going to be 36 months or something in that neighborhood. And so the biggest question is, when do we get a top for the 3-year cycle? Because whenever we get that high, we'll begin a multi-month decline for the dollar. I'll say that again. After we get that high, it'll be a swing high on the daily that will cascade into a swing high on the weekly, that will cascade to a swing high on the monthly, and that'll be your signal. The 3-year cycle has peaked. We're now declining into the 3-year cycle low, which will be a multi-month decline for the dollar, which should be a tailwind for other assets that move inversely to the dollar, like commodities and really just equities in general, risk assets as well. So that's the big thing to be watching for. I'll certainly be giving updates to that on this channel, and on my Twitter feed in real time for sure. That's the big thing to watch for the next big kind of pattern. But that high could come next year, right? It could actually correlate with the 3-year cycle low for the dollar, for the equities and other risk assets, somewhere around March 2023. We'll have to see. I'll post a separate update about the broader markets to talk through that. But that's the update on precious metals.